The recent inflationary increase in interest rates combined with the overall inventory shortage has presented difficulty in meeting buyer demand, which still remains high. As inflation is anticipated to stabilize in the coming months, we expect mortgage rates to also settle lower with less volatility as interest rates return to their historic norms. Let's take a look at the numbers. New listings decreased by 18.6% to 364 homes from 447 homes last year, while pending sales dropped 23.6% to 375 homes from 491. Closed sales also declined by 31%, decreasing to 518 homes from 551. The days on market saw an increase of 31.6%, rising to 25 days compared to 19 days last year. However, inventory of homes available grew 6.4%, rising to 602 homes from 566. Prices continue to rise, with the average sale price increasing 11.2% to $349,256 from $313,961. Lastly, the month supply of inventory rose 25%, up to 1 month from 0.8 months. Even if prices fall, many potential home buyers in 2023 may find it difficult to afford a home due to higher mortgage rates that have diminished purchasing power and increased monthly payments by hundreds of dollars. The higher rate also has impacted prospective sellers, as many have secured historically low rates but are reluctant to trade those rates in for a more expensive one with their next move. If you're thinking of making a move this year and want to go over some options, reach out and let me know. I'd also love to hear what you think the market will do this year. Let me know in the comments below. Don't forget to like, subscribe, and hit the bell button so you don't miss out on any important real estate market information. Thanks for watching. See you next time.